Hi, my name is John Dowdy, and I'd like to give you a quick review of the stock market for the week ending June 14th, 2013. I call this another bounce because, yet again, we bounced off the 50-day moving average. After watching the video, if you'd like more data, please come to my website, www.superchargedretirementincome.com. Let's take a look at the stock market. And we'll look at the stock market by looking at the ETF SPY, which is the ETF associated with the S&P 500. On this chart, you see that we have been in a uptrend, this green channel, since last November. And this has been pretty well to contain the uptrend market. We went above it for a short period, but now are back in the middle of the trend. This chart also shows the 50-day moving average and the 200-day moving average. The 50-day moving average has been very good for support. We came near it here, and again here. We bounced off here, and then lately, within the last couple of weeks, we have actually bounced twice, which is a little bit unusual, but we're still above the moving average, so we're in a bull market until we drop below this one and potentially even the 200-day moving average. We got the first bounce a couple of weeks ago on June the 6th, and that was a very good bounce. It went all the way up to 165. It looks like we were all going to the top of the range again, but then this week we ran out of steam and started a downtrend. On Wednesday, we almost hit the 50-day moving average. We did hit it on Thursday, but then bounced again. And then on Friday, we had a kind of tepid response to end us in the middle of the channel. We're still a long ways above the 200, and we're still in the channel, so all indications are we're still in the bull market. But we are beginning to see a few chinks in the armor. Let's take a look at this chart, which shows the average true range trailing stop. This is an indicator that has been pretty good in the past for showing when to buy and when to sell. As you can see, we've gotten several sell signals that in this bull market has been too strong. These sell signals have not been good. We got a sell signal here. It only lasted a couple of days before it went back to a buy. Here we lasted about a week before we went back to a buy. And a little over a week ago, we got another sell signal, and only time will tell if this one will be a good signal or if we'll actually go back to a buy sometime in the next few days. The buy signals have been good. As you can see, we've had 3 buy signals, and all of those have been pretty good and made a substantial amount of money. So the ATR is on a sell signal, and we'll just have to wait and see if that proves to be prophetic or if it's just another false signal. So in summary, the market has reached its correction target, as we talked about a couple of weeks ago, and it bounced for the second time. But this time the bounce was not as strong as the first time. The ATR trailing stop indicator is on a sell signal, but not too much to worry about yet because these signals have not been very good for this particular uptrend. So our game plan is, number one, give the benefit of the doubt to the bull market until the price action shows that that is not the best course of action. If we reach a new high, then all is well. But if we fall below the 50-day moving average, look out below. We're probably headed down to the 200-day for a substantial correction, or we could even go below the 200-day and begin marching toward actually a bear market. Legal disclaimer: the contents of this video are strictly for informational purposes and should not be construed as any investment advice. As you know, you and only you are responsible for your investments, and investments involve risk of loss. And of course, past performance does not indicate any future profits. So good luck. Thanks for viewing. And if you'd like more data, please come to my website, www.superchargedretirementincome.com. Thanks again. See you next week.